Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 28th, 2025, and we're diving into the Q2 2025 earnings report of Business First Bancshares, the parent company of B1 Bank. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Business First Bancshares has shown some interesting developments this quarter, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the financial highlights. Business First reported a net income of $20.8 million, translating to an adjusted EPS of 66 cents, slightly above the forecasted 65 by analysts. John, what does this tell us about the company's performance?
It's a positive sign. The company not only met, but slightly exceeded expectations, which is always a good indicator of stability and growth. The net interest income also saw an increase to $67 million, showing that Business First is effectively managing its interest-earning assets.
How significant is this in the context of their overall financial health?
Very significant. It suggests that their core operations are strong, and they are maintaining a healthy balance between income and expenses, which is crucial for long-term sustainability.
Operational efficiencies and future outlook. Business First has been busy with operational changes, including a successful core conversion and a branch sale. How do these moves position the company for the future?
The core conversion to Fidelity Information Systems is a strategic move to enhance their capabilities and efficiencies, which is essential for scaling operations. The branch sale resulted in a $3.4 million gain, which not only boosts their capital, but also reduces annual operating costs by $750,000.
And what about their net interest margin?
The net interest margin remained stable at 3.68%, which is a good sign of their ability to manage interest rate fluctuations and maintain profitability.
Strategic initiatives and market expansion. Business First is also expanding its market presence with the acquisition of Progressive Bank. What impact will this have?
This acquisition is a strategic move to increase their footprint, particularly in Texas, where 40% of their loan portfolio is based. It adds $752 million in assets, which will significantly enhance their market position.
How does this align with their overall strategy?
It aligns perfectly with their growth strategy, as mentioned by CEO Jude Melville. They are positioning themselves strongly in the Dallas market, which is a key area for their future expansion.
Credit quality and risk management. Let's talk about credit quality. There was a slight increase in non-performing loans. Should investors be concerned?
While the ratio of non-performing loans increased to 0.97%, it's still within a manageable range. The provision for credit losses was $2.2 million, which indicates that the company is proactively managing potential risks.
And what about their allowance for credit losses?
The allowance for credit losses stands at 1.02%, which is a prudent measure to safeguard against future uncertainties. It shows that Business First is maintaining a cautious approach to risk management.
Key takeaways. In summary, Business First Bancshares has delivered a solid performance in Q2 2025, with a slight beat on EPS and strategic initiatives that position them well for future growth. John, any final thoughts?
Business First is on a strong trajectory with their operational efficiencies and market expansion strategies. Investors should keep an eye on their continued growth in the Texas market and the integration of Progressive Bank.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. Let us know your thoughts on Business First performance in the comments below.